Welcome back everyone, hope you're doing well. In today's video, we're going to continue talking about my brokerage account challenge. Now, if you haven't seen any of my prior videos, I will include a playlist down below so that you can catch up. But basically what I'm doing is I'm starting with $25,000 in my brokerage account. My goal is to double my money by swing trading by the end of the year. But at the very least, I need to outperform a simple low-cost index fund. If I don't beat the index fund, then not only did I waste money, but I wasted a lot of time this year. Now, it's only been the first week. I've been getting comments from people already, and I just want to emphasize, there are 252 trading days in the year that the New York Stock Exchange is open. We're only on day 5, so it is a marathon, not a sprint. Now, the index fund started with $25. It's in a mutual fund total stock market. And it's up 3.4%, 85 cents. That's pretty impressive. And I'm up $149, so only 0.6% of my starting $25,000 balance. But once again, marathon, not a sprint. And it was a good week for the index. The S&P 500 from its low was up 4%. It's kind of frustrating because we started the year with the stock market basically at an all-time high. The S&P is above 2,800. That is really impressive. So as a swing trader, you're waiting for the dip to swing into some stocks, and the stock market just keeps going up. And I was swing trading last year and not recording or documenting any of it, but there were two huge dips, one being in September and then again in November. And if you look at the MACD down here, you can see what the selling pressure was and then how it reversed into two buying events. And yeah, when I swung in on those dips and then made some pretty good gains, I thought I was a genius. So we definitely need some sell-offs in order for some good swings. And when you look at the MACD, it's just steadily going up, small pullbacks, but nothing that looks like that event in September or November. And I was watching TV on Friday, and President-elect Joe Biden took to television to announce multi-trillion-dollar stimulus plans were coming. He's going to unveil the specifics of the plan next Thursday, but he was on TV saying, hey, as the Dems, we now control the Senate. We're going to get votes. Mitch McConnell can't block this anymore. The House has already green-lighted multi-trillion-dollar stimulus packages. And I think with the recent news events, I think these are going to pass. I don't see the Senate blocking increased check amounts or unemployment aid or just maybe even financial help for state and local governments. We're not going to talk about the politics of is it a good idea to be injecting or spending or creating all this debt for the federal government. I'm just as an investor, as a swing trader, trying to react to it. So when we log into Schwab and we sort by the biggest losers of the day, this is Friday, these are the stocks that lost the most. These are always the stocks that I look at first to see if there's any good oversales, potentially good stocks to swing into. First one we can talk about is General Mills. This is the cereal company, and it's been trading sideways for a while now, and you can see all the technical indicators up here are saying bearish. But the 50-day crossed below the 200-day moving average, and the stock immediately shot down. So it's kind of funny when you start looking for these events with the technical indicators and then you see them, and once again, other investors see them too, and it's a predictable pattern of what's going to happen. And I don't really understand why General Mills isn't doing well. I mean, their PE ratio is 14, their dividend is 3.6, it's protected. Honey Nut Cheerios is my favorite cereal, so I don't know why General Mills isn't doing well. But this is just one of those cyclical stocks that goes up and it goes down. It was at a local high for the last 5 years here, and it could keep going down until the share price hits 50 or maybe even 40, and then it's just going to start trending back up. Another company we can quick look at is Lockheed Martin, and once again, we got a death cross. It's been trading sideways, and the 50-day moving average moved below the 200, and the stock is in a free fall. I don't know what to say. Once again, when you look at Lockheed Martin's fundamentals, PDE is only 14, dividend yield is 3%. America is not going to stop buying F-35s. This is a defense contractor. So why is the stock price going down? I don't know, but it could easily continue going down until it hits a resistance line, maybe 300. It went as low as 250 at the end of 218, and then it's just going to start trending up again. What's a good Golden Cross event? You can see this company Ventas, ticker symbol VTR. The 50-day crossed above the 200, and then look at this green candle. Look at this buying event. It shot up from 39 all the way up to 47, basically over 50, and now the stock is consolidating sideways. A company that's down today that should be going up according to its technical analysis, you can see that for Tyson Foods, the 50-day finally crossed above the 200. It kind of went up and then it immediately shot back down. I was looking at Tyson, and it's always good once again to check Google News, and I'm just seeing a bunch of weird articles. A fired Tyson manager who bet on how many workers would get COVID-19 said the office pool was an attempt to boost morale. Man killed in accident at a Tyson Foods plant in Sherman. Federal judge order keeping meat packers open can't shield Tyson Foods from lawsuits. 4 ways Tyson Foods made 2020 worse. Once again, if there's just a bunch of weird news surrounding a company, move on to the next stock. You don't have to buy that company. A company that I saw that I thought was interesting was Home Depot, and this is one of the COVID positive stocks that benefited from everybody deciding that they had to convert their home into their office. So it bottomed out in March, April. It then went on a tremendous bull run. It then hit a resistance line at around 290. And for whatever reason, since August, people have not been willing to pay more than 290 for Home Depot. And it then goes down and it bounces off 270, goes up, bounces off 270, goes up, bounces, goes up. It's currently at 269, so it's probably going to go back up to 290 soon, maybe. But maybe this stock is overvalued currently. Something to look for, though, is when it actually does break through 290, then it signals that Home Depot stock, once again, is in a breakout. And that actually, ironically, is a good time to buy when it can finally get past this resistance line that it's been facing for half a year now. So in my last video, I covered why I took a $1,000 position in AbbVie, Xerox, Huntington Ingalls, and AT&T. I'm still bullish over the next couple weeks that these stocks will do well. I don't necessarily feel at this time I want to add to those positions, though I definitely could in the future. So let's talk about 3 more companies that I took a $1,000 position in. And the reason why is with Biden being on TV and talking about all the stimulus, I think that the next 2 months are going to be incredibly bullish. Now, obviously, there could be a newsworthy event that could change things. But with governments all over the world, once again, just injecting cash to keep the economies afloat because of the pandemic, I think these are 3 companies that are currently somewhat down or trading sideways that should benefit and that I'm comfortable holding for a couple weeks, maybe a month or longer. The first one being Johnson & Johnson. Their single-dose vaccine treatment is going to be approved by the FDA this month at some point. And I think Johnson & Johnson's vaccine is going to be more popular than Pfizer, Moderna, or AstraZeneca. The reason why is because it's going to be a single shot. You won't need to get two rounds. This shot also doesn't require ultra cold storage and transportation. In addition, I believe, I could be wrong, but Johnson & Johnson is using traditional vaccine technology where you inject someone with a weakened form of the virus and then your body has to fight it off. Whereas with Moderna and Pfizer, they're using CRISPR technology. They're injecting you with mRNA so that your body can produce the antibodies for the virus, and you're never actually exposed to the virus. So your body will learn how to fight it without the traditional way that we've made vaccines, where you're introduced a weakened form of the virus. Johnson & Johnson has run up a little bit the last 2 months, I'm sure in anticipation for the vaccine being approved, but this is a large multinational corporation that does lots of things, and its P/E is only 25, its dividend is 2.5, it's a well-managed, well-run company, so I'm bullish long-term on Johnson & Johnson regardless of the vaccine. Next company I was looking at is Verizon, and Verizon is down, and I checked the news. I can't figure out why. This is a 5G play. Verizon is only one of the 3 major telecommunication companies in America, and it's down to its 200-day moving average, and that is unique. That is a large pullback from the 20, the 50, and the 100. So I expect this to snap back and go back up at least 5 to 10% in the next week or so. And looking at their fundamentals, I mean, P/E is only 13, forward P/E is 11, the dividends payout is 4.3%. I have no idea why Verizon is down. And then the next company is Facebook. Facebook is one of those companies that everybody loves to hate, and it was up huge this year. From the March-April low, it shot up all the way to 300, and then it just hit this resistance line. Facebook stock could not get above 300, and it's been trading sideways for almost half a year now, and it's consolidated here around the 267. However, I think Facebook is undervalued considering other traditional growth stocks. If you guys have not tried the Oculus Quest 2, this thing is amazing. I'm pretty confident that within 5 years, everybody will own a VR set. I think these will become as common, if not more common, than Xbox or PlayStation. Facebook obviously has the market on social media content for advertising in addition to their marketplace. Facebook stock is not going anywhere, and currently people aren't buying it for whatever reason. So I thought it was a good time to jump in. P/E, once again, 31, but for those other FANG growth stocks, that's not too high. Now, the 4 companies that I took a larger position in, $2,000, are American Express, Conagra, FedEx, and COSTCO. Let's go through these. And I mentioned FedEx in the last video because it had reached that 100-day moving average. And I was like, why is it down? This doesn't make any sense. And 3 days later, it kept going down. So I couldn't resist. I had to buy some FedEx. UPS is down as well, and I don't know if it's just because, maybe because the Dems control the Senate, people think the post office will be saved now. Obviously, if the post office were to be privatized or disbanded, that would benefit FedEx and UPS the most. However, when you look at the fundamentals of this company, it's still not bad. So I definitely think this is an oversale, and somebody's going to step in and buy it at least until it gets back to the 100 or 50-day moving average. So I just wanted to jump in this, try and snag 5%, and then get out. Next company is Costco, and if you're a Costco member, then like me, you probably love Costco. Sadly, there are no Costcos near where I live, so I do not have a membership currently. But I'm bullish on this company. I think it's one of the most well-run companies in America. It obviously ran up a bunch and did pretty well due to the pandemic. It looks like it's hit a resistance at around 380, 390, and it's currently down below the 50-day at 269. I don't see Costco stock going down. There's a new emphasis they're going to be placing in 2021 on their online sales, which obviously will help them compete with Walmart and Amazon. And yeah, I'm not worried about Costco going down in the near future. So I thought I'd jump into this stock because I think if a bunch more stimulus is announced, this is one of those companies that will benefit. Next company is Conagra, and I'll be honest, I don't know a lot about this company. They're involved in packaged foods, but just doing technical analysis, it's trading sideways, and it appears to be trading within this range of 39 and 34, and there was a huge sell-off in the last day or so. You can just see this red candlestick, and I didn't look at the RSI, but if you looked at the RSI, this is probably an oversale. And this occurred back in November and also back in September, and people noticed the huge sell-off, and then they start buying again. Looking at Conagra's financials, PE 16, forward PE 13, It has a 3% dividend yield. I don't know why there was a sell-off. There was no bad news. So I expect this stock to go up 5 to 10% in the next week or two. And then finally, we have American Express. I'm an American Express customer. I love this company. And you can see that for the SMA, the 50 crossed above the 200 here, and there was a huge buying on this day in anticipation of that event. I think the financial companies are doing pretty well just because people are feeling safe that these bank stocks are not going to be in trouble, that this is not a repeat of the 2008 economic crisis. So I'm incredibly bullish on American Express in the near term, and I wanted to jump in this stock just because I think all this new stimulus being announced, it should help this company. In addition, they just had huge new signups for their American Express Platinum offer. And what's interesting about these credit card rewards, when you give somebody points, they haven't actually given you anything yet. When they give you American Express points, you're the one spending money, they're making money off the transaction fees, but there's this delay time. It takes people a while before they figure out and decide to use their points somehow. So in the near term, this is a huge boost for American Express. And American Express is hoping in the long term, if they retain these new signups by paying the annual fee, it'll cancel out the huge sign-up bonuses they paid for the card. So these are my larger positions: American Express, Conagra, Costco, and FedEx, about $2,000 each. And with Conagra and FedEx, I'm putting a limit sale order on these two stocks. I just want to get my 5% and get out because they're acting weird. With American Express and Costco, I'm more bullish. I'm not going to have a limit order. I'm just going to check it, once a day. And once it's in that 5 to 10% range and I feel like I want to take a profit, I'll just sell it. For Facebook, Johnson & Johnson and Verizon, once again, smaller positions. And yeah, I'm just going to hold them until they get up in that 5 to 10% range. And then if I feel like it, I will sell them. Also, nothing's changed with AbbVie, Xerox, AT&T, or Huntington Ingalls Industries. Once again, waiting for these to go up 5 to 10%, and then I'll take profit. Now, I know in my last video I said it's okay to do nothing. It is really weird looking at the fundamentals and technical analysis of these companies, and everything is up. Everything looks good. As a swing trader, you want to see overreactions or oversales, pullbacks. And I'm not seeing it. I'm not seeing what I saw last November and November. And I think with Biden being on TV announcing next Thursday, there's going to be they're going to unveil the details to their trillion-dollar stimulus packages. As soon as Biden is sworn in, the Congress is going to vote on them. It's going to happen fast. So once again, in the near future, the next month or two, I just think everything's going to be up. The S&P is probably going to hit 4,000 by March. That's my prediction. So I just wanted to jump in some stocks to capture some of these gains. I'm still holding 7,000 in cash, waiting for a good opportunity. I'm going to be checking my stocks and the biggest losers of the day every day to see if there's anything that looks good. But there's nothing I can do if just everything is going up because so much money is being flooded into the market. Okay guys, if you enjoyed this video, give me a thumbs up so the algorithm knows it's good. In addition, consider subscribing if you haven't already. The challenge will continue for the rest of 2021. If you have any comments or questions, leave me one down below. I love hearing from you guys. And until the next video, take care.